overall, U.S. stocks have been sort of stuck in a rut within that 100-point trading range for the whole of this month and even a little bit more. Let's bring in our next guest who says today's decline on Wall Street confirms this year's sell-off isn't over yet. With us now is Erin Gibbs, senior partner and CIO at Main Street Asset Management. Erin, great to have you with us on a day that markets were trying to really digest all of the hawkishness that we've seen from central banks around the world this week. And of course, we have the US CPI to look forward to. So what will really be the next catalyst for markets?
Well, certainly, I don't think anyone could miss, the CPI report coming out tomorrow morning. And obviously, we had that deceleration in April versus March. And so this is going to be the month that says, is that a trend or if it was just a one-off? And so that, I think, is really where everybody is crossing their fingers, particularly for markets with such a highly followed indicator for inflation. And certainly, I think it's also important to note that, for the past couple of weeks, when you're just looking at that chart, even if there was slightly negative news, certainly not from central bank, but other negative news, the markets were able to shrug it off and at least be fairly flat. Today has obviously been a big down day, and I think that just says, all about, we haven't flushed out the fears and those who want to sell out of these markets.
So much so that even energy stocks were down. That's one sector that you're still optimistic about.
Yeah, so that really has been the winner. And on days where it is so negative that even energy doesn't hold up, those have actually been great days to get into the energy sector, because obviously has been doing very well. It is the one sector that's up for the month for year to date. And so if you see those opportunities, I don't see a break in the trend. I don't see energy prices or the stocks coming down just yet. And that has been one safe haven. So, use these small dips to get in while you can.
You talk about preferencing still cash and having that degree of caution as well. What percentage of the portfolio are you talking about here? How much dry powder are you keeping dry, I should say? And what's kind of your catalyst to become a bit more bullish?
Sure. So it's the overwhelming majority. So it's about 70% in cash right now. And I'm looking for any sign of turnaround. And one of those things that we've looked at is not just across different equity asset classes, but as bonds as well. And we really don't see the stabilization of bond prices yet. Again, May was sort of favorable. We even saw a decline in rates and obviously an increase in prices, but that was, again, very short-lived. You really have to be trading constantly, even on an intraday basis. And so until we see a reversal of that trend, and I would say that equities have definitely priced in a recession more so than a lot of the bond markets. I think a lot more negative sentiment is already built into the equity markets, and I think that's going to be the area that will recover first. Now, I'm not sure when that is going to happen just yet. I was certainly hopeful that May was going to be that sign of that turnaround. We shall see when we get the CPI report as well as the Fed's comments next week. But I think the first comeback of really being fully invested will definitely be on the equity side versus the bond markets.
Right. Well, yeah, I mean, that's quite staggering. 70% is not anywhere near fully invested, obviously. But Erin, what do you see when it comes to fixed income opportunities? Because you're getting kind of more and more encouraging signs that maybe this is becoming more of a relevant part of a balanced portfolio now.
Yes. So, well, I think, 70% cash is still, pretty out of the market. I think we're really looking about recession risk as well. And obviously, it's going to be a few more weeks before we really get a better sense of where the U.S. is going to end up for second quarter. But that's another big part of it is just flushing out the fears, using technical indicators as first signs, breadth, and obviously being able to close up towards the top versus the bottoms. But obviously just a lot of uncertainty and, markets not being able to handle some slightly hawkish news from the ECB is just one of those signs that there's still a lot of fear out there.
Erin, great to have you with us as always.